Hey traders, this is Blake Morrow, and you're listening to the week ahead video for June 6, 2021. I hope you guys are having a great weekend. We have a lot to talk about because this last week on Friday, the jobs report was released. It obviously moved the market, kept the dollar in its range. We're also going to talk about what's happening this next week. We have the Bank of Canada, the European Central Bank. We have inflation data here in the US. So a lot of things are happening this next week that we've got to talk about. But before I go into that, I need to mention, if you haven't tried out ForexAnalytix, remember it's only $1 for 10 days. Try it out. Download the mobile app. Once you get the mobile app loaded, make sure you jump into our chat rooms. You can see our chat rooms right here where we're constantly talking about the markets, what we're looking at, what we're trading. It's a great place to be involved with the ForexAnalytix community. Also, if I haven't mentioned traderssummit.net, this is a great place where you can get updates and analysis from economists from around the globe. I've actually been performing some interviews here. I got a really great one coming up this next week that you guys are all going to find out about with Mark Faber. Really excited about that. So anyway, make sure you visit traderssummit.net. Looks like that. Okay. Now let's talk about everything that's been happening. Now, I'm going to bring up a chart. This is the Canadian yen. I want to talk to you guys about the Canadian yen because this is a currency pair that's nearing a major technical inflection point, the 161% extension of the post-pandemic lockdown move. So if you think about the highs that the Canadian yen were at pre-pandemic, then we went into a lockdown. We sold off pretty aggressively. We went to 161% extension of that entire move. Okay. Now, what you'll notice is as the Canadian yen has been rallying in price, relative strength has been moving lower. So we call that a divergent relative strength move, and that is a risk technically to bulls. Now, why is that important? Well, like I said, the Bank of Canada is actually meeting this next week. They're one of two central banks that are meeting, of the G8 that are meeting. And the Bank of Canada is expected to keep rates unchanged. Many economists are expecting the Bank of Canada to continue to taper bond purchases every other meeting. This would be the other meeting. So this is where they keep rates unchanged. Now, if that's the case, the market's expecting that, but the Bank of Canada has also been pretty vocal about the strength of the Canadian currency. And if you look at the US dollar Canadian, the Canadian currency has been one of the strongest, if not the strongest, G10 currency around. It's up there, right? And notice how the dollar Canadian's just been trapped in this at the lows, or the Canadian currency at the highs for the last month. And with the jobs report, even with the weak Canadian jobs report on Friday, the U.S. jobs report had the influence of the dollar pretty much across the board. So the dollar Canadian came off of this key 121.50 resistance. I think this range is pretty important, but we might actually bust out of this range following this Wednesday Bank of Canada rate decision. If they show that they don't care about Canadian dollar strength anymore, because remember, they've been vocal about it and the Canadian dollars continue to strengthen. If they drop that rhetoric and they lead the market to believe that they're going to continue to taper moving forward, we could see the dollar Canadian break through 120 finally. The flip side is if they do reference the Canadian dollar strength, we might see the dollar Canadian pull out of this range to the upside around the 121.50. So I'm going to be watching that really carefully. But more importantly, I go back to the Canadian yen, and the Canadian yen has really been struggling to make highs as the equity markets have been making highs. Now let's talk about the equity markets here. So I'm going to take you over to the S&P. The S&P is in a wedge, but it continues to move higher. Now, remember, we've been actually looking at this as being, a megaphone pattern, but this would be the upper end of the megaphone pattern anyway. So currently right now we're in an ascending wedge. Now that leads me to believe that we might actually stretch to new highs in the S&P up towards 4,300. We have inflation data on Thursday, CPI data. If the market continues to believe that inflation pressures are going to be transitory, or that the Fed doesn't really care about this inflation data, right now, and maybe in the next few months, if it's persistently high, we might see a change in tune from the Fed. But right now, that inflationary data, especially if it comes in, in line with expectations at 0.4% on a month-to-month basis, we might actually see the S&P move higher towards the 4,300 level. We're set up for that. Now, let's say, for whatever reason, the S&P actually breaks below, let's call it 4,100. That's going to be problematic for currency pairs like the Canadian yen that have been struggling to make new highs with stocks. That's something I'm looking at. And also I'm looking at another yen pair as well. I'm looking at the euro yen. Now remember, the ECB is also meeting this week. A lot of economists and a lot of analysts are expecting the ECB to be fairly hawkish in their rhetoric. Well, the euro yen is actually coming out of an ascending wedge. Now, I want to make sure that you all understand I'm not bearish the euro yen. And here, let me show you why. This is a weekly chart. This is a multi-year, actually, you could say a decade trend line that we broke. And we broke that out of, 130 roughly, so about 300 pips lower than where we're currently at. That's where the breakout really occurred. Now remember, this is a weekly chart, okay? Now you go over to the daily chart and we are coming out of an ascending wedge. So near term, like this week, we could see some selling pressure come into the euro yen. But remember, we do have the European Central Bank rate decision on Thursday morning. That could influence the euro yen. And a lot of people are like, well, why is the euro yen coming down? I'd venture to guess because rates are coming down and that's actually putting upside pressure on the yen. Canadian yen, euro yen, they're both starting to come down. But because we have both of those central banks, their rate decisions this week, we could actually see a bounce back in the euro yen. So the euro yen, in my opinion, this is going to be a pretty important support level, and that comes in around 132, roughly 132.50. We're at 133.20. So how we respond right around here is going to be very important to me going into this next week. So remember, we have the euro yen and the Canadian yen that are moving away from risk appetite. Is that a reflection of the central bank decisions that are coming up this next week? Perhaps. Could those central bank decisions really influence the euro yen and the Canadian yen by midweek this week? I do think so. And that's why we should be keeping an eye on them, especially with stocks moving higher. If stocks continue to break higher in the S&P, it should drag the euro yen higher, the Canadian yen also higher. But as you can see, they're showing some weakness right now, and that does have my attention. Now, one last thing I should talk about. I should discuss this because it's the weekend and the markets are actually moving. Bitcoin continues to stay below the 200-day moving average. We have this triangle formation, and this is actually a pennant right now. And it looked at the end of the week that we were threatening an upside breakout in Bitcoin. Let's go over to a 4-hour chart. You can see this triangle kind of looked like that, right? We are threatening a breakout, and all of a sudden we dip back below that triangle breakout point, and we're actually attacking support. I'm filming this on a Saturday midday, so you guys can see where we're just kind of hovering around the support. I don't know where we're going to be by the time you guys watch this video, But we have to watch Bitcoin because Bitcoin is at risk if we start breaking lower. And you know, if you listen to me daily, you know my view on Bitcoin. While we're below the 200-day moving average, while we're below 43,000, I am bearish. This pennant actually points, and I don't know if we'd complete it here, but it does point to a move to 10K. Now 10,000, and I know I said this on the last week ahead video last weekend, I think that's a little bit of a stretch, but a move to the 20,000 level, the big major breakout point, I think is possible, especially if Bitcoin starts to break down. The reason why I'm bringing this to your attention is because I don't know how a move in Bitcoin will influence or affect the rest of the financial markets. There is institutional funds more now so than have been in any point in the past allocated, you know, institutional money is allocated into Bitcoin. So if we start to see Bitcoin start to, and other cryptos move lower, is that going to influence risk appetite? For now, the stock market has been completely oblivious of what cryptos are doing. I'm surprised by that personally. I've, you know, watched Bitcoin lose what we've lost nearly 40% from the highs, and it hasn't had any material effect on equity markets thus far. But is there a breaking point? I'm not sure, but I am watching Bitcoin rather closely, and I'm watching not just Bitcoin, but also Ethereum and Dogecoin and all these Litecoin and all these other cryptocurrency space. I'm watching how they perform here, and they are trading heavy. So I think it is something that we need to stay, you know, pretty keen on. So guys and gals, if you like this video and you appreciate what we do, please give us a thumbs up. Please subscribe to our channel so you don't miss any of our training videos, our interviews that we do every day, and our analysis that we perform on a daily basis, especially the free stuff. And we hope that you are enjoying it. So give us a thumbs up. I appreciate it. I know our team that works on the weekend really appreciates it as well. You guys have a great remainder of your weekend. I'll see you next week on the F.A.C.E webinars. Talk to you soon.